Thank you, Lawrence. First Republic Bank has been seized by the state and federal government actually today. This marks the third bank failure this year and the second largest bank failure in U.S. history. The San Francisco-based bank has now been sold to J.P. Morgan Chase. Customers lined up waiting for the bank to open this morning outside its branch in Millbrae. Some had regular banking business to do, but others came looking for some answers.
Well, we're trying to see what's going to happen. We're not sure what's going on. If it's going to go strictly over the Chase, are they going to be able to give us, our interest on our CD? And if they can reassure us that it's going to be okay, we'll leave the money here.
Last month, First Republic reported it had lost more than $100 billion, which led the FDIC to seize the bank in an effort to prevent investors from panicking. The federal government is trying to reassure investors that the banking system is safe, but the average bank customer still has concerns.
Joining us now for more perspective is San Jose State Professor Emanuel Sequeira. Good evening, Professor.
Hey, good evening. Thank you for having me.
Yeah, was this a good move? Are your nerves settled over the deal?
Yeah, I'm a little settled. The Federal Reserve actually seems like they're a little settled as well because this struggle with First Republic Bank was causing a lot of uncertainty in the markets.
Is this the worst over? We had Silicon Valley Bank, we had that bank back in New York, and then this one. So three regional banks that basically failed. Is this the worst of it, or do you still think there's still risk ahead?
So it seems like a lot of the problems that First Republic was facing stem from the same issues that Silicon Valley Bank faced, and it was dragging along. They lost all the $100 billion of deposits right around the Silicon Valley Bank's failure, and then big banks stepped in to sort of alleviate some of those issues, and they almost got through with it until they had to present their earnings and the losses started accumulating again. So for now, I believe that everybody thinks, including the big banks and the Federal Reserve and the FDIC, thinks the worst is over, but we can't predict the future 100%. But it seems like the biggest part of the crisis has been averted.
Okay, but I'm going to ask you to predict the future. I mean, given this trend, are we going to see the end of regional banks? Is this going to stop at this point, or do you see other smaller or medium-sized banks going by the wayside and getting gobbled up by the big guys?
I think there will be a lot of issues coming up for sort of medium and more regional-sized banks. When J.P. Morgan got the deal to acquire First Republic Bank and all its assets, they got a great deal, but it also ended up with them being even bigger than they were before. And so now the smaller banks are going to have even more trouble raising funds. They're going to have even more to keep up with the big banks per se. And so it is going to be a lot harder. A lot of the smaller banks are going to be struggling with renewing loans to their clients who they have given loans to before, because it's so much harder for them to raise funds now in the form of deposits, because the Federal Reserve keeps increasing interest rates, and that costs the smaller banks a lot more money to raise funds in the form of deposits.
First Republic had been in the Bay Area for many, many years, and everything I heard about it was it had a sterling reputation, especially for customer service. The customers really liked that personal touch that they provided that you couldn't get at most other banks. Now that JP Chase is taking over, is this going to be a whole different customer relation experience for the people who have accounts at the former First Republic?
I think J.P. Morgan actually struck a good deal in the fact that they got to acquire some of that great customer service. A lot of the First Republic branches now are going to be operating as J.P. Morgan Chase branches. And so for now, the employees who were with First Republic Bank before are still going to be employees until J.P. Morgan decides otherwise. And so a lot of that good service that customers were used to probably is going to continue, and maybe they could give some tips to the other JP Morgan Chase branches as well, help them to get some of these skills as well.
Yeah, good point. Yeah, I know some customers there who are just heartbroken. I think they're hoping that they can still maintain a good relationship with the bank. You did mention about the Fed raising the rates, which prompted some of these problems. There's speculation about, whether they're going to bump it back up again another quarter point. What do you think will happen?
So I think that was what I started out with. There was a lot of uncertainty with not knowing what's going to happen at First Republic Bank. And I think because it's all been resolved at the a quote unquote lowest possible cost to the FDIC. Pathway has cleared pretty much for the Fed, most probably to increase interest rates again when they meet by that quarter of a percentage. So I think a lot of the stress and the volatility that was going on about what the Fed is going to do, most analysts now agree that the Fed is going to increase interest rates one more time the next time they meet.
All right, Professor Emmanuel Sequeira from San Jose State University. Appreciate your time tonight and your insight. Thank you.
Thank you.
Thank you.
Have a good evening.
You bet.
Good night.
Good night.